Meanwhile, Treasury Secretary Steven Mnuchin is blaming market volatility on machine trading. Roll the tape.
I think that with the advent of computerized trading, which has such a big part of the market now, combined with the Volcker Rule, where you can't have market makers commit capital, you just have much bigger moves in both directions. And I think clearly you have a situation here where the market has overreacted to the Fed's comments, and you see program trading taking over.
Now, also fueling calls for more oversight here is coming from at least one departing SEC official who wrote, with all the volatility market swings we've seen lately, is she right? That's the question. What do you think?
Is it 1987 and no one told me? I feel like Trump Tower is we're just breaking ground on it. And you know what? They've always trying to blame the robots on these crashes. In 29, they were saying the ticker tape machines were 3 hours delayed.
You don't buy it.
In 1987, it was portfolio insurance. You know what? I don't like the fact that we're moving to such high velocity investing. I don't like the ETFs. Made everyone think you need to go in and out every few minutes as opposed to a daily investment in an open-end traditional mutual fund. That said, you cannot blame the robots on trillion-dollar market cap companies not being able to support that valuation, or things going wrong, or them doing things that look like they're not going to grow forever. That was our own doing. Don't blame the AI.
I think it is about 50 or 60% of trading volume now done by computers. And I think that the Volcker rule change is probably more significant than simply the amount. Computers have been doing this for a long time. They've been a factor in the marketplace. I think what has changed is the amount of capital on the sidelines that can be committed to basically even out these swings. That is no longer there.
I thought Mnuchin was fine until he said that there's been an overreaction. Now he's sounding like his boss. He shouldn't be commenting on whether or not there's been an overreaction or if it's an appropriate amount down. But more attention to the effects the machines have, I think that's a good idea. Now what to do, I don't know, but they should have oversight over the machines.
They do have oversight over the machines.
I don't agree with you, Adam. Look, here's the thing. There's this old-timey notion that somehow investing should be years and decades, like Warren Buffett. Who is to decide what is the right time frame? Is it minutes? Is it days? Is it seconds? Who cares? All that's happening now is computers are taking over what humans would be making the decision. Humans could take a minute. Machines can do it in seconds. What's the big deal? I love when government, though, comes in to decide this is the right way to do it. That's so much BS.
Because it can be manipulated. You have to prove that it can't be manipulated. If it can't, then great. Let's do it all in nanoseconds.
You could have manipulation now with just humans doing it. There's manipulations when there was floor traders.
The most manipulation history on Wall Street was before the 1920s, before any of this stuff went robotic.
Before
when it was
the
all
FCC.
insider. Right, exactly. So that's people manipulate. I mean, it's what you make the computer do that's going to be the manipulating. There are regulations. Obviously, they miss a lot of
regulations, but we've seen regulators try to catch up with technology before, and it's been a disaster, right?
I was going to say that, before they start trying to regulate this, maybe be schooled in how it works, because we've seen in recent hearings, that's just not going to happen. There's going to be no appetite for that whatsoever.
Well,